All right, good morning, everyone. It is 8:47 in the morning of March 3rd, 2022, and this is my pre-market strategy session. So right now, what we're looking at right here, this is the monthly chart on the SPY, which is a proxy for the S&P 500. And what we have here is a little bit of a trend, a little teeny tiny trend line. Now, I happen to think that it takes more than 2 data points in order to make a trend. So this isn't really a trend line. This is just sort of I wouldn't call this a trend line. I would call this just kind of the high of one month connected to the high of the next month. That's it, really. I wouldn't read too much into this. However, what it is doing here is it is acting as a little bit of a line in the sand here. So, here's back here on the 9th of February, it popped up higher than the monthly. I'm going to call it the monthly line, and so, and so here we are again, we're popping up above it again. Haven't really, we've made some lower highs here, but we don't have let me get rid of this volume so it's easier to see. There we go. Well, I guess we do have a lower low here, but man, I'll tell you, that thing was just bought up like crazy. And then the volume on it too, look at this volume. It hit this low level here and the volume came in and 252 million shares, which I guess actually, and this one over here is 213 million shares at the bottom over here. Now let's see, and that is relative. That is pretty high volume for right now. But here we go over here. Yeah, that's February. I don't know. Well, so as of right now, until the economic sort of forecast changes, until Wall Street can kind of like look past what's on the horizon, until something new pops up on the horizon, so we can look past what's coming at us, then the general trend is down, and the probabilities of being in a profitable trade will be best if you trade in the direction of the trend. So the past few days, actually, for an experienced trader, this right here is a low risk area. And there's always kind of, after a big move like that, there's going to be, let's see, here's another example. Here's a day where it was just kind of a big move. And then there were a few days of, kind of sideways movement after that. And a lot of people, the title of this video is Trading the Chop, right? And so the deal with this is, it's tough to trade in this area on the equity markets. What's going to happen here? If I were to guess, I would guess that the market's going to drift up a bit and try and break this right here. Try and break this high of 458. It's just a guess, there's nothing, absolutely nothing scientific behind that. And it is counter trend, And so looking at this too closely and paying too much attention to this right here and trying to trade it, I've had a couple of good days this week trading this. Yesterday was an exception. I gave back, I had a great morning and I gave it all back in the afternoon. But other than that, these 3 days right here have been good to me. So, I'm going to stay away from trading this. Maybe we'll see how it goes today, because there are other things to trade, and sometimes I get tunnel vision. Here, look at the risk range here, and I could have been trading oil. Look at that, and I haven't traded oil at all during this run, or I'm sorry, very little. I can't remember. I'd have to go back and look. I remember I definitely traded it in here. Definitely traded oil in here. But my best recollection, I may have taken like one or two trades in here, and since December, but I can't remember if I have or not. In fact, actually, I think no, I have actually. I'm sorry. I was long. I was long oil. I'm sorry. I was short oil. Right back here we go. Right back here, I was short oil. The USO. Actually, let me pull up the USO chart here. There it is. Here we go. There it is. Okay. Oh, it was. Geez, my short-term memory is going as I get older. I definitely shorted at this 68.80 level right here, and then had to let it go for a loss. God, it was only 2 days ago. I was definitely looking for a harsh rejection and a continuation of the rejection to the downside here, and it wasn't working out. Fortunately, for me, it was a small position because I was starting to average in right here. I was planning on the top of this gap. Let me get you back to where the gap is. I wonder, it might not show up on the daily. There it is right there. So here's the gap, right? And the top of the gap is typically a rather significant point of resistance. In the same way as the bottom of the gap is being approached, let's pull it over. As the bottom of the gap is being approached right here and it got rejected, I was expecting a very similar rejection right here. And it did open up above and then just got rejected, wholly, in this candle right here. But it only lasted a couple days. Now it's just blasted through that price level. And I imagine, with the way things are going, this thing is headed right back to, these highs at least, 125 or so. So there are things that are going to be easier to trade than the indexes. Sideways markets are like everybody gets chopped up in sideways markets. And really, to say I've been profitable trading here in this time frame, and I guess I've been doing it for a while, so I can call it skill, but there's luck in there too, plain and simple, and so there's also other things to trade here. Gold is on a move here. It looks a little bit more difficult than oil to trade, but look at this little bit of consolidation happening right here. So typically what's going to happen here is it's going to resolve to the upside. That's just the way that it goes, especially in the economic environment we're in. Inflation is heading up, and the Fed is talking about tightening by 0.25 points, and actually that's 250 basis points. But they're catching hell for it. They've got inflation year over year that's at like 7%, and that's the new way of counting inflation. If we were still counting inflation the way we did back in the 1980s, I'm pretty sure inflation would be around 15 to 20%. But 7.5% is bad enough. Year over year, 7.5%, it would only take 7 years or so until the dollar only buys half of what it used to. All right. Well, anyway, gold is on a run, and looking for bullish setups is going to get you paid. For the time being, I think it's time for the S&P and the NASDAQ to cool off for a little bit, let them consolidate and bobble around, and then there's going to be something that I imagine there's going to be something that causes the next leg down to get cranked up, and once it does, then I'll be here to trade it. So oil and gold, look for the bullish setups. S&P, the NASDAQ, I'd pretty much stay away from, and at least for a few more days until this sort of period of consolidation, which it could last, a couple more days, maybe a little bit longer. It seems to be about 4 days now. Here we have 4 days consolidation until the move in this area. 4 days here. Let's see, we've got a bit of a slide. Now we've got 4 days here. So, who knows? Today could be, the day of the new movement, or, but who knows? In any case, though, more big moves are on the way, whether it's to the upside or the downside. It's just a matter of when it happens, So Fridays and Mondays tend to be, pretty busy days. So, all right, everybody, that is going to be my morning strategy session. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.